Forex response to OPEC production cuts by www.forexconspiracyreport.com. After protracted negotiations and intervention by Russia's President Putin, the Saudis, Iranians, and the rest of OPEC have agreed to cut oil production by about 10%. The goal is to prop up the price of crude oil, which fell by more than half in the last year and a half. Consumers across the world have been happy with cheaper gasoline, heating oil, airplane fuel, and natural gas, but the ruble, Saudi Riyal, and currencies of other exporters have not done well. The Forex response to cheap oil has been huge Saudi budget deficits and could be a Saudi currency depeg versus the dollar. Saudi billionaire Prince Alwaleed Bin Talal raised the possibility that the kingdom may depeg its currency as the country undergoes unprecedented social, political, and financial change. As a last resort, maybe sometime 2-3 years down the line, it's a possibility, Alwaleed, speaking in an interview with Bloomberg TV, said of a potential change to the Riyal's fixed valuation against the dollar. Meanwhile, it should stay where it is right now. There are so many things happening. The ruble does float versus the dollar, and since the collapse of oil prices, the ruble has fallen to half its value versus the greenback. The Forex response to OPEC production cuts could be a strengthening of the ruble, Riyal, and other producer currencies. It depends on whether or not the cuts result in higher oil prices. The problem for Russia and Saudi Arabia is that they will shoulder the bulk of the cuts and will need to see oil go up in price enough to compensate them for the loss in production and more in order to help their economies and their currencies. Will the OPEC cuts work? History of OPEC price agreements. The World Bank discusses OPEC's grip on oil prices and how it is diminishing. The Organization of the Petroleum Exporting Countries, OPEC, unsettled oil markets in September when it announced it would resume placing limits on oil production among its members, effectively reversing 2 years of unrestrained production. But how much control can OPEC really exert over prices? History suggests that formal agreements to influence the price of a particular commodity eventually fall apart. OPEC's own history also shows that the short-term benefits of managing supplies become long-term liabilities. In addition, the oil-producing landscape has changed dramatically in recent years with the advent of non-conventional producers, notably the U.S. shale oil industry. These factors will test the oil exporting organization's power to influence markets. OPEC produces a third of all world oil. A 10% cut would in theory result in a 3.3% reduction in global output. Then we need to factor in OPEC members who will cheat and keep producing at current levels, and other producers like fracking operations in the USA that will increase production when prices rise. U.S. production as a percent of the global total has gone up by 3 to 4% in the last 5 years due to new technologies. These have become more efficient and more profitable, and the USA is not part of the OPEC agreement. In the end, the Forex response to OPEC production cuts will probably be muted, as the price of oil will not change all that much. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.